It is the Tuesday edition of Cowboy Metals Live, where we broadcast from the great state of Texas and we take no BS. It is June 21st. Wow, we're already 3 weeks through June. Can you believe it? Sound looks like it's working. We got a poll up, guys. Is real estate up or down in your area? Up, down, hasn't moved yet, or we are in a bubble? Feel free to answer that question during the poll or during the presentation. We're going to talk about where real estate is going today because I've been watching real estate and it's had pockets of doing really well and it's had areas of slowdown. And I think there are a lot of factors contributing to it, the general economic condition, but also, as per the title of this video, Americans moving from dysfunctional states and what that's doing to rental rates versus what that's doing to both the rest of the commercial market and the single family market. I think you guys are going to find this interesting. So thank you for joining the live stream today. We will get started by looking at where net migration has been coming from. So here we have a chart. Source ultimately is migration-data-portal.org, but the information came from United Nations, Department of Economic Social Affairs, international migrant stock from the United Nations database. So these are all big entity numbers, and you can see the United States had something like 58 million immigrants in the year 2020, according to the census data, or had 50 million immigrants who at one point in time had immigrated, and we're still living in the United States. That's quite a bit. I believe our population is somewhere in the 360, 370 range. So we have quite a bit. And if you look at it over history, it's interesting some of the charts they have to show where we were historically. There has been a lot of migration, not only into the United States, but migration across the United States. This is a cool little map I found also from the U.S. Census Bureau with the 2020 data. And you can see the areas that are getting 50 or more migrations per existing 1,000 population. So that's a statistic they use to determine how many people are going and color code this. The dark blues are 50 to 1. So you can see where I live in Dallas-Fort Worth area, we're in that range, in that dark blue or that almost dark blue. So Texas had a lot of blue and dark blue in it. You can look at Florida and almost the entire state is just covered in blue and dark blue. Of course, you see states like Arizona, Nevada, and Utah. The Northwest is getting a lot of migrants. Of course, a lot of them are moving out of various areas of California. You can see some are moving across state from this area down in Texas, which is a little bit higher crime next to Mexico. You can see some migration away from Mississippi as well. Certain pockets from like, I believe this is North and South Dakota, if I'm correct. Somebody correct me if I'm wrong. But it's interesting to see most of the migration out are tend to be somewhat more liberal areas or areas that may have less economic opportunity as well. Because you can see down here, this would tend to be a little bit higher crime, a little bit less economic opportunity. Up here in the Texas Panhandle, I know this very well, not much economic opportunity. So people are moving to the metro areas in Texas, this triangle between Dallas, Austin, San Antonio, and Houston. You can also see people are moving heavily into Arizona. So you get a lot of people moving to like Flagstaff, moving to Scottsdale and Phoenix and those areas. Of course, a lot of people are moving to the Pacific Northwest as well. In Idaho, Idaho is probably the most free state left in the U.S. if you're looking at local laws and things, or one of the top ones, definitely for sure. So I do think that people are moving from less free areas or more economically disadvantaged areas to areas that have either better economics or a better political system for them. Usually, I would frame that in terms of restrictions, legislative restrictions, and also who has the better pay rates, essentially. And when we look at Wikipedia, the list of U.S. states and territories by net migration, the 2020-2021 data is out. Florida had the most, Texas is second, Arizona third, North Carolina, South Carolina. So again, I think it's pretty clear to see people are moving to what are considered either freer or more economically stable areas, and that's affecting a lot of what's going on in the economy. Plus, we got the macro. So I'm going to talk about the macro here for a second. We're going to talk about across the board, U.S. existing home sales tumbled to a 2-year low. the NAR warns worse to come. So they think it's going to get worse. I think it's the National Association of Realtors, if I'm correct. You can see the data is red here. It hasn't been good for any of 2022. The most recent time we had were in the 2020s. As the pandemic was really just kind of getting started. But it's interesting to see what's going on with existing home sales. Now, existing home sales across the US are retracing. They're not doing very well. That means that probably people are going to rely on the existing home stock more. That could have an upward effect on home prices, but it could also show that people just can't afford housing in general. So we'll have to see what the overall housing numbers are when they come out in the next few months. Here's also an article by BizNow, as reported on 𝙎𝙄𝙇𝙍, talking about commercial real estate being on the brink. Now, I don't think that this has to do with apartments, because I'll show you that in a minute, but other types of commercial real estate are down. Some of the REITs that allow you to invest in that real estate are down. So you can see the FTSE, any REIT, all REITs index has plunged more than 21%. That's looking broadly at the REIT index. Industrial REITs are down 27.7%. Mall owning REITs are down 37.7%. Office REITs, or real estate investment trust is what a real REIT is, has fallen 30% on average. Well-known names like Vornado are down 36% year to date. Prologis 31.5%. So a lot of the commercial real estate's really down, not doing well. And this is something I called probably 2 to 3 years ago. I saw this coming. I talked about it on 𝙎𝙄𝙇𝙍. I wrote articles about it. The people that wrote about the REITs thought I was nuts because I was way ahead of the game. But I said, this is, the lack of an economic growth, the inflation is going to affect people's ability to rent, whether you're a business or an individual, and it's going to affect these real estate investment trusts. And for years, the real estate investment trust painted a much rosier picture than what was actually taking place. And if you've been driving around to your local strip malls and commercial real estate areas, industrial areas, in your neck of the woods over the last couple of years, you've probably been seeing a lot more vacancies like I have, and in nice areas, because I live still in a pretty nice area in North Texas. North Texas doing well, relatively speaking, economically, but I see vacancies everywhere in commercial real estate, not so much in rental real estate, but a lot in the other areas of commercial. And so that's driving, it's showing the tale of basically two economies. The commercial sector is really suffering since COVID. Of course, the lockdowns, the restart, people deciding they're not going to rent commercial real estate anymore. They're going to work from home. Big companies like I used to work for in Verizon, pushing their employees to home and saying, don't come back to the office. Stuff like that's going on. That's putting pressure on those areas of commercial real estate. And you see pressure starting to build under single family homes as well, because from an affordability perspective, people really can't afford to buy new houses or necessarily buy old ones. And so what's going to happen is people are renting. So what's going on with the rental market? According to Redfin, the typical US asking rent surpassed $2,000 for the first time in May. That's the first time in history in the United States. And here's a nice little chart that shows dating back to 2019. I wish I had a longer time series for you guys, but it wasn't available via Redfin. I didn't have time to cobble one together before the presentation. But you can see it's risen about $400 over the span of the last 3 years, give or take. And the rents are going up because there's such demand for housing where people may not qualify for a loan. In an article I was reading today on CNBC, they said we haven't given out nearly as many ARM loans, adjustable rate mortgages, nor the no income, no documentation types. So the mortgage market is actually a little bit stronger than it was 2007, 2008. Only about 2.5% of all loans are the adjustable rate ones. And even those come with an introductory 7 to 10 year period of fixed rates to give people time to prepare for when those adjustable rates hit. So we are in a little bit better space there. That's why we haven't had as many foreclosures as we had back in 2007, 2008. But it's putting upward pressure on rental prices because everybody now needs to rent. Less people are able to accept a mortgage, especially the rising interest rate environment. So for that reason, the underbuilt housing market, the amount of immigration, both from outside the country, but also immigration across the country to certain places, has caused rent to spike in certain areas. I'm going to talk to you about that. Like, where is that occurring? Here's a top 10 list. Top 10 metro areas with the fastest rising rents year over year. Austin in Texas, highest of 48%. Of course, Tesla just moved there, I believe, last year. Tennessee, 32%, Seattle, Washington, 32, Cincinnati, Ohio, 32, Miami, 29, Fort Lauderdale, 29, West Palm Beach, 29, New York, 24, Nassau County, New York, and New Brunswick, New Jersey, 24s. So you can see where a lot of the areas where people are moving to are seeing this rent spike, and we're seeing it in Dallas-Fort Worth area as well. My rent went up quite a bit last year, like a lot, and it is basically because of shortages. You can see the median asking rent and what it is. You're starting to see places like Austin, Texas, traditionally been cheap, starting to approach or exceed national median rent. In fact, it's over the 2,000, but it's starting to approach more expensive areas like places in New York, places in California, places in Florida, not quite caught up to Miami, but getting pretty close. So that's what's happening with rentals. So if you happen to be in commercial real estate for residential, for rentals, like apartment buildings, 1 to 4 apartment complexes, duplexes, single family homes, duplexes, or fourplexes, you're probably doing pretty well. If you had owned commercial real estate, a strip center with stores like dry cleaners and nail shops and convenience stores and places like that, you're not doing so hot right now. And people where rent prices are not doing as well, where people are moving from to get away from either the economic situation or the political situation or the combination of both. Here's an interesting article from MPA Mag. U.S. rent prices rising 4 times faster than income. So we want to compare that to wages and talk about the affordability gap and how can people afford? Well, right now people cannot afford, with high interest rates and high home prices, to buy homes. So they're moving more into the rental market. And that gap is growing wider between how many people can afford to rent versus afford to buy. And it's been very high as of late, but it's rising. The median rent price rose 149% from 1985 to 2020, while income grew just 35%. So housing 3 times, income just 1/3. That is a huge, huge difference from what people can afford versus what they have to pay for rent. It says a new study here shows a rent income ratio nearly doubled in a 35-year period ending in 2020, meaning Americans must spend significantly more of their earnings on rent than 40 years ago. The upshot, national median rent prices rose 149% during the study period, while overall income grew just 35%. So if you had owned apartment complexes, you were doing very well, not necessarily even having to upgrade your apartment complexes, you were just getting more rent. And along with rising both commercial and residential real estate prices, if you have been in the real estate game, you've done very, very well, although there are signs that that trend may be reversing to the downside. The sobering findings from the 𝙂𝙊𝙇𝙀 real estate further exacerbate delays for some in achieving home ownership at a time of rising rates and inflation. And even though renting remains cheaper than buying for most households nationwide, the study revealed that rent price increases actually surpassed home price gains in 7 metros, where the change in rent prices is 92% greater than the change in home prices since 2000. Today's inflation has served to exacerbate the problem further. While the study examined the period between 1985 and 2020, soaring inflation is blamed for recent surges in rental rates. Since 2000, the study found, the median rent price has exceeded inflation rate by 29%. And during that time, rental rate rose 90%. Why? Well, we have people coming from outside the country. We have people moving about the country to specific places in which we see the rental markets have adjusted their prices. This list will match up pretty well with this list. Single family homes starting to come down, the new ones, because people can't afford them, both due to interest rates and due to the rise in prices. Certain areas of commercial are plummeting, leading the REITs, the real estate investment trusts, which are the paper derivatives that you can invest in that own a lot of these properties and manage them, are starting to fall. The one thing that's doing very well are the commercial apartment complexes, and single family homes that are being rented are doing well. Even if the market prices for the homes are coming down, the demand for that rental real estate has gone up. So that's a pretty good snapshot of what's going on in the real estate market. Why do we cover that? The main reasons, because we're a gold silver channel, we look at other assets in relation to the dollar and in relation to gold. Real estate looks like it's going to make a bit of a U-turn here. in certain areas while remaining strong in others. That's good market intel if you're investing or you have investments in those areas to keep up with what's going on. But it's also good to know, I think, from a cultural perspective, and that's what I want to talk about now, what's going on in the country and why people are moving. I've seen studies, and I don't have one up for you guys up on the screen, but I've seen studies that have talked about why people are moving. And it's two main factors. As you might imagine, economics is one of the main factors driving people out of certain areas. So certain places on the East and West Coast have gotten very expensive, or in other big cities where they've gotten very expensive, people are certainly moving from into areas in which they can find better economic conditions, or maybe their employer moved, something along those lines. Then we have people flooding into the country. We have right now over 50 million immigrants, the highest number ever for the United States. And as a percentage, it's recovered since about the 1900s. I wish I had that chart up, or that line chart up, but we're at a highest percentage of immigrants, highest number of all time, but highest percentage since back between 1900 and 1910, when you had a lot of migration from other countries to the United States. All that also is pushing up real estate. But what we've seen retracted is mostly a result of the pandemic and the shutdowns. A lot of that commercial, that retail, serving the public, when, you know, the restaurant, all those kinds of things never fully recovered. But with all the people flooding in, the areas that are doing well are single family homes that are rentals, and commercial apartment buildings and those types of places, townhomes, anywhere that's providing a place for people to live. So that basically is a trend. I called it a few years ago, and Seeking Alpha talked about it. A lot of the real estate gurus are in Seeking Alpha that follow it very closely said the REITs will never come down. They're crashing. I showed you that data. I called it 2 to 3 years ahead of time. Put a notch in my belt, feather in my cap for that one. That one did take a couple of years to come to fruition, but it clearly looks like what's going on right now. And that's going to cause problems with overall real estate prices. It's shifting the nature of the market and the inventory in the market across different real estate sectors or areas, or focuses, if you will, if you're an investor. But what it's also done is made it very expensive to live in America. And at the end of the day, there's going to be a reckoning. When you have, since 1985 to 2020, that's 35 years of data, you have rental prices going up 5 times as fast as people's wages. You now have 2 people working instead of 1, barely able to keep up, less than $400 in savings. We saw that statistic a year and a half ago come out. The average person has less than $400 in savings. And you have home prices going up so much at the same time that interest rates are going up, meaning it's a double whammy on buying a house or buying a place to live, because you have both a rising price and a rising interest rate. Something's got to give. And what's going to happen is you're going to see big price crashes in a lot of the retail commercial real estate, the office commercial real estate, the industrial commercial real estate. The apartment buildings are going to be quote unquote okay, and that they're going to have higher rentals. But I think we're getting to the point where we have higher interest rates. The activity in sales and the activity in taking on funds to fix up those commercial apartments is going to fall. And you're going to see quality of available apartments probably fall, development fall, even though rental rates will stay strong for a while. And I think rental rates for most big cities where people are moving to, like in Florida, like in Texas, like in Arizona, and those types of places, those rental rates for residential rental property are going to do very well over the next few years, even if some prices across the different sectors in commercial and residential come down. It just means probably less price appreciation for some investors. But at some point, something's got to break with that real estate market. Why am I bringing this to you? Again, it's because I like to look at all markets and compare them to gold and silver. Gold has held up this year to date, despite having risen higher and fallen. In the meantime, it's held up better than the rest of the market. Silver is down slightly this year, not as much as you may think. Precious metals have done well when everything else is selling off. The only other thing that was doing pretty well were certain types of commercial real estate, which I've outlined. I am now predicting that those are going to start to come back, and then gold and silver are going to basically rule the day as we head into this deeper recession that we're going to be headed into. So if you're invested in commercial real estate, depending on where you're at, you may want to recalibrate your investments. Think about how you can move around to protect yourself as the coming recession gets closer. Just think about these things and recalibrate where you need to. if you're trying to figure out where you're going to live and how you're going to afford a place to live, you may want to look at the trends that I showed about where people are moving, where rents are rising, and make appropriate preparations and perhaps even move somewhere which is more affordable or better suited to you, given the situation, given the fact that rents have been rising for 35 years more than wages. And that's why we're reaching a breaking point. It's not just the last couple of years, it's 35 years in which rents have been raising so much, as supported by a growing population and a lack of general investment in that area. It's going to, it's pushing up the rental rates, and that's going to stay even while I think other areas of commercial real estate crash, and some areas in the country, the residential real estate crash, where it's particularly weak and demand is weak. That's what I think is going on. So there can be conflicting signals in different areas of real estate, but pay attention to where that is, because it could affect your budget as a consumer. It could also affect your portfolio as an investor. All right, going back to the poll, is real estate up or down in your area? 40% say up, 18% say down, 28% says hasn't moved yet. Says 46% say down or hasn't moved yet. The other 54% is in we're in a bubble or it's up. So that's about what I thought we would get, depending on where you guys are coming in from. Plus, we also have guys coming internationally. So this is not just a US poll, it also includes other areas across the world. So we could be seeing different things in different areas for real estate, but that's what's going on in the United States. I do not see any super chats, ladies and gentlemen, open. So I'm going to assume that you guys don't have any super pressing questions, but I may answer a couple of questions if I see them in the chat. But now, however, would be a good time to remind you of our precious metals dealer. That would be one Ian at Arc Silver, and I'm going to show you how to get there on the screen share. You go to goldsilverpros.com. You click on precious metals deals. You click on the button for access deals under Arc. Fill out the form of the requisite information. Make sure to whitelist his email address, and he will reach out to you. Why would you want to do that? Because he has the lowest price on the precious metals he gets. He now has access to 5 to 6 wholesale dealers. He's skipping middlemen in between him and the wholesalers. He's ordering different areas of gold and silver and providing you the lowest prices where he can. Example, last year I bought a 1,000-ounce bar from one of the COMEX depositories for, I think, 99 cents over spot. Now he's got them for about $1.29 because demand is up. That's cheaper than any place you'll get it. He's had the kilo bars, he's had 10-ounce bars, he's had coins. So reach out to him because he's been your lowest price solution for gold and silver here for a while. A lot of you have ordered from him and thanked me for the process. So I'm glad that you guys were happy with that. And again, we're just bringing that to you based upon our relationship with Ian. He's a friend of ours, and the fact that he can get you gold and silver cheaper than just about anybody else. And let's see. Dude Boy says, I don't have any questions, Rob. I'm just waiting on the crash. It's kind of where I'm at right now. I don't have a whole lot of questions with what I think is going to happen, the general time frame that'll happen, how I'm positioned. And it may be a good time to talk about that for a moment. I see an interesting comment. I'll get to that comment in a minute. So essentially, I'm selling my land. So land, gold, silver were my last long-term investments. I would say I've got some other short-term speculative ones. I'm selling my land. Texas got it under contract, and I'm taking that money and going ultra liquid because I think we're getting closer to the point at which I'm going to want to be ultra liquid, and I'd rather be a year or two early rather than a day late for opportunities that I'm going to pick up in this market. And I am watching those opportunities very closely and plugged into a lot of those. So just letting you guys know where I'm at. I'm super liquid. I do not, after this sale, I will not own any more real estate. I will be out of the real estate ownership business, looking to buy deals when the time comes, when the reset and the crash happens. I'll be very liquid in order to do that. Some cash, the rest, gold, silver, and other things safely stored, of course, not anywhere near me, but in a depository. And that's going to be the way I play this. You should do whatever you think you should do. That's not financial advice. It's just expressing my opinion based on what I see. And hopefully you guys can capitalize off that. Make your own decisions, do your own research, contact your financial advisor. There's my disclaimer. Let's see if there are any other questions. I'm looking through the chat. Remember, there's a poll up. I'm going to end that poll here in just a moment. Looks like we've got most of the people in here voted. Thank you, everybody, for voting in the poll. I still did not see any questions. Look like you guys are ready. Jim Jones said more and more reduced homes on the market in my area, which was fastest growing county in Florida and the sixth in the country. Wow, that's interesting. I wonder why they're wanting to move out. Maybe it's the local legislature. Maybe prices just got too high. I do not see any other questions. You guys know everything. I've got the smartest. Oh, she has one. Okay, ask the question, Julie, if I haven't seen it. Let's see if I can search back. I think somebody said Julie had a question. I don't see the question. Anyway, I think that's going to do it for tonight, guys. Julie, stop by next time and ask your question. We'll go over it. That is your picture on what's going on in the real estate market. I had said previously that certain areas of real estate were doing as well or better than gold, silver. But other than that, the market was crashing. Some of that real estate is going to begin to pull back. And we're going to start to see if people go to gold, silver, go to gold, silver. And it's not going to be sexy at first. It's going to be that slow ride up, gold, silver with spikes down as it gets hammered by the derivative market. But it's going to continue to march up while everything else is losing value. And that's exactly what gold needs to do. Silver will be set free when gold finally gets its chance to pop as we get closer to that great reset that we've all been talking about, the financial crash and the move to CBDCs. I'll have more for you on that move to CBDCs next time I speak to you. I got news on that, guys. We'll save that for the next program. Thanks, everybody, for joining. Remember to get your gold and silver from ARC Silver, our trusted resource on the channel. Thank you guys for supporting the channel and stopping by. Till next time, this is Rob Keats, goldsilverpros.com.